Let's just talk through what type of moves that we are seeing on the rand. Currently, it's sitting at 8.39.
Yes, we did see the rand at the beginning of the week gain some ground on the back of the fact that we saw some positive data come out of the Chinese economy on the trade front, and this was possibly really on the back of what we had been seeing from the Chinese economy, that sentiment had really soured a little bit and that the economy wasn't really performing as well, that the economy is not performing as badly as what those sentiment indicators are alluding to. But then yesterday we saw Spanish and bond yields again increase, and that really took the rand back to where, back to weaker levels. So we're really seeing the rand really playing out with what's happening on the global economic front at the moment. We did see the rand really trade yesterday in a range of about 8.38 to about 8.48, and today's indications are that we're going to see a similar trading range, possibly in the region of about 8.30 to about 8.47.
Are you also of the view that traders are sitting on their hands, really waiting for that Greek election that's over the weekend?
Yes, indeed, that poses one of the major event risks as we head into the weekend. And we are seeing traders, as you mentioned, sitting pat and looking at what's going to happen and really drawing direction from what's happening in the global economy. Other event risks that we could possibly have some kind of pressure on the euro, and then again on the local currency, is the G20 meeting that's going to be held directly after the Greek elections on the 18th and 19th. And then followed by that, we are going to see the FOMC meeting on the 19th as well. And there's also speculation that there could possibly be a further round of quantitative easing, and that's also likely to pose some kind of event risk for the local unit.
A lot of event risks for the local unit, but we've got our own data coming out next week. That's a CPI. It's currently sitting at a 6.1% at this stage. We have seen oil prices coming down. What kind of expectations are you foreseeing for CPI next week's session?
Well, Standard Bank is expecting CPI to come down to about 5.9%, and that's really on the back of the fact that we have seen food inflation as well as fuel inflation starting to come down, and we more or less seem to be in consensus with what's happening in the direction of the CPI. We are expecting CPI to average about 5.8% for this year and to ease somewhat to about 5% in 2013.
Easing back, Shireen, would you perhaps think that the central bank would look at these numbers and say it's time to cut now? They did allude to saying that they would possibly cut or increase interest rates if situations changed, but what would warrant an interest rate hike?
We don't believe that the Reserve Bank is going to change rates anytime soon. Our base case is for the repo rate to remain unchanged at 5.5% through to November of 2013. Yes, but the Governor did allude to the question in the question and answer session of the MPC meeting that the balance of risk for rate cut and rate hike is evenly balanced rather. So we do see that there is a probability, and that probability is rising for a rate cut, but we do see the SARB remaining on hold for the remainder of this year.